Welcome to Stock Talk with Mike. I want to give a little bit of a market update. I'm seeing a lot of panic, a lot of market crash videos, and just overall a lot of concern about the activity we've seen in the market. And I just want to provide a little bit of context. Let's look here at the S&P 500 chart. This is the one-year chart of the S&P 500. The index that you want to measure your performance against, especially if you're buying individual stocks, to see how you're performing over the long term. And the goal really being to beat that market average of about 10% annually that the S&P 500 outputs over the long term. Your goal should be to beat that. And the S&P 500 has been chugging along its merry little way. Basically, I think it's 0.2% off all-time highs as of the close on Friday. So if you were in an index fund, if you're feeling a lot of hurt and panic and concern about your portfolio right now, if you were just in a broad S&P 500 index fund, you'd be sitting around market record highs and feeling pretty good about yourself, realizing I understand a lot of stocks have seen a lot of volatility. But that's normal, especially if you're invested in a lot of high growth stocks that have performed really well over the last year or 2 years or 5 years, to see broader pullbacks. So you're going to see bigger swings in individual names, but you see bigger swings to the upside. You're going to see bigger swings to the downside. Completely normal. And I think more what we're seeing is really a bit of a sector rotation, and it's very healthy actually, and really not too concerned at all about the market, and certainly not in a market crash when the S&P 500 is at record highs. Even if we look here at the NASDAQ, we've seen a little more pain. So the NASDAQ has more tech focus, more of that's the large cap type tech stocks. So a lot of these smaller names that we talk about in my channel and a lot of the other channels that a lot of retail investors are invested in don't even make it into these indexes, right? So they're not accounted for. But a lot of tech is represented in the NASDAQ, and it's recovered a little bit over the last week or two, and we're about 7.3% off the record highs earlier this year, and we're still up on the year slightly. So really that's not a lot of pain in terms of volatility in the short term. If you have a long-term focus, we're sitting completely fine here. So really the market's sitting pretty good. But if we want to go back further and look at how the market performed during the big market crash, when we first entered this pandemic back in March of 2020, we saw a massive sell-off. Look at the NASDAQ here. So we're only down about 7% off the all-time highs in March of 2020. So if you're new to investing and feeling a lot of pain, we see nothing, right? March 2020, in less than 1 month, we saw a 33% sell-off in the NASDAQ, and it was indiscriminate selling. Everything was selling off, and there were some great buying opportunities. So keep in mind, that's just when you want to have some dry powder and be ready to add to your positions and accumulate more shares in companies you like for the long term. But this kind of volatility is completely normal, especially what we're seeing now, and it's nothing like we've seen in the past. So really not a lot to be panicking about at this time, especially as it's just some sector rotation and some concern around the 10-year bond yields, like things that you won't even be talking about in 2, 3 years, 5 years from now, right? You won't even remember this time, right? Look at what the S&P 500 did. So keep in mind right now, we've seen that NASDAQ sell off a little bit, but the S&P has stayed strong. Well, back in March of 2020, the S&P sold off just as hard as the NASDAQ. So there was no safe haven in stocks. Everything was selling off. The S&P 500 was down 31.7%. NASDAQ was down 33% in really short order. Like there was a few trading days there that it was just absolute bloodbath. There, it was financials, it was tech stocks, it was industrials, it was consumer goods, it was everything. Let's look here at some of the high growth names that we have a lot of investors in. A company like Tesla, it has sold off pretty hard here in 2021. We're about 31% off the all-time highs of over $900 a share, down to $618 a share. But even now, if you look at the one-year chart of Tesla, it's up 523% in 1 year. So all those critics on the sidelines say, oh, I told you so, terrible investment. Look at Tesla sell off. Ha! Anyone that's been a long-term investor and been at this for a while has made a lot of money on Tesla, even with this sell-off, and it's really just a blip on the radar. hopefully along the way, I talk about this a lot on my channel. In your high conviction name, well, not your high conviction, but your largest holdings, as they run up, you want to be trimming a little bit to maintain the size in your portfolio, and that helps you build that cash position. So we have sell-offs like this, you can add to your highest conviction names, and that's been something I've been doing very aggressively during this market sell-off. Look at another one like Square. It's 25% off the all-time highs. Squares is one of the largest positions in my portfolio. I was buying it very aggressively back in the March 2020 dip, where it got into the $30 range, right? And now, even with this big sell-off, it went from 280 or some odd dollars a share down to now where it's currently trading around 213, so 25% sell-off. It's still up 291% over the last 52 weeks, the last year, and much more than that if you look at the March 2020 lows from now. It's been on an absolute incredible run. In addition to cash, it is good to have a little bit of diversification. Not always the most exciting thing to talk about in a YouTube channel, but one kind of staple, kind of slower growing but steady Eddie growth company that I own in my portfolio is Home Depot. And at times like this, it reminds me of why I own a company like Home Depot, where you see for me personally, some of my largest positions, my highest conviction growth companies sell off reasonably hard. A company like Home Depot has actually performed really well for me. So it's up 55% over the last year, but even year to date, it's up 15%. So it's done really well while we've seen this sell off and a bit of a sector rotation out of these high growth tech names. And it also, on the side of that, all pays a really nice dividend of around 2.2% as well. So I really like Home Depot. Just again, it's not probably the most exciting company to talk about as far as investment ideas on a YouTube channel. So by the end of 2020, with the high growth stocks in my portfolio performing really well, I had started to raise a lot of cash. I was sitting at about, I think, 30% cash by the end of 2020. And I have to say, with the sell-off we've seen in a lot of these high growth names that I hold, companies like Square, companies like Teladoc, I've been aggressively buying and actually utilize all of that cash. And I've actually even added a few new positions in companies like Shopify and in Pinterest, for example. But the only reason why I've actually invested all that cash, I definitely wanted to take advantage of this sell-off and keep buying as things continue to drop. And I'm okay if we continue to see some downward pressure. I'm okay with that. I wanted to add to these positions. I do think these down markets are an opportunity to accumulate more shares, and that's what we should be doing right now. But the reason why I spent it all already is I knew I'd be having new funds coming into my investment account. So I'm just going through a refinance of an investment property, and that's going to free up some new cash. So I'll still have a significant amount of money on the sidelines to add if we continue to see further sell-offs in a number of my highest conviction names. So I'm really happy with the way my portfolio is allocated right now. I've added a few companies that have been on my watch list. I've accumulated more shares of some of my highest conviction names, and I'm actually just really enjoying this market, even though I've seen about a 15% sell-off overall in my portfolio from the all-time highs about a month ago to now. And I think I'm sitting pretty much flat or maybe up about 2% now on the year for 2021. But I'm okay with that. My portfolio was up nearly 100% in 2020. I destroyed the S&P. And I'm happy I had some cash to redeploy during the sell-off and feeling like my portfolio is in a good position right now. So hopefully you're in a similar position, feeling okay about the market. I mean, we're seeing a really big sector rotation, right? That's really healthy too. We're not seeing massive outflows. We're seeing money move into, yeah, sure, some money is going to go into bonds, et cetera, at times and affect the market. We're also seeing a lot of supply right now with still a lot of SPACs coming public and whatnot. But the biggest factor right now is we're seeing a big rotation. Look how financials have performed. Banks have done extremely well. I think JP Morgan's up 50 or 60% in the last little while, right? Which just doesn't happen very often. We're seeing a big move into industrials. Eventually, we're going to see that equilibrium where those companies are they're already looking pretty fairly priced and don't tend to trade well above or at a big premium to historical valuations. So I think eventually people are going to look back at a lot of these growth stocks and see, wow, they're starting to look, they've sold off pretty hard. We're starting to see valuations come in, and these are names people are going to want to hold for the long term, and money is going to slowly start to flow back in. And I'm not too concerned about trying to time those bottoms. All I know is when companies I like for the long term are selling off 20%, 30%, 40%. That's what I've been waiting for. That's why I'm definitely going to be accumulating more shares and buying more shares. So that's what I've been doing. If you have no cash on the sidelines or didn't have any cash on the sidelines during this sell-off, I'm not here to give you financial advice, but I think you can hang tight. I certainly wouldn't be selling my highest conviction growth stocks now, now that they sold off. I would be believing more strongly in those. I believe in all the companies I hold, the ones that have sold off the hardest, I actually believe in the most right now, because I bought those based on the fundamentals of the company and where I think they could be 5-10 years. And now they're trading cheaper at a better valuation. So I actually have higher conviction the more those names have sold off. If we got some really terrible company news, like we're seeing with some of the Chinese stocks lately, like Alibaba, which I recently sold out of, even though it trades incredibly cheap and it pained me to do it. Unless we get company news, I don't get lower conviction because the stock price goes lower, right? It's the exact opposite. So hopefully, it's a bit of a mental game, right? If you like a company because it's moving up, you're going to be feeling a lot of pain right now because these companies are dropping down. This is why you need to understand, do the research and understand the companies you're owning, and you'll feel a lot better when we see sell-offs like this, and feel comfortable adding to your positions. Anyways, that's about all I have for you today. Really, I'm not too concerned about the market. I think this is very healthy. A lot of these big movers to the downside are still up significantly once you zoom out a little bit. These have been really blips on the radar to date, so really nothing to be too concerned about, I think, for the long term. Hopefully you're hanging in there as well. Best of luck and happy investing.